Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that is not good. Markets are suddenly gripped by extreme fears of where the world's largest economy is heading. But first up today, we can report that the overnight dairy pulse auction has seen milk powder prices fall. A big fall expected for whole milk powder didn't happen, but it was a retreat all the same. The small fall expected for skim milk powder actually came in more pronounced than expected. Both shifts have ended the recent run-up in these prices, although they probably don't necessarily end the higher trending. Neither correction was enough to unstitch that at this event. But uncertainty is back all the same. US data releases overnight remained resilient. The US retail impulse, as measured by the Red Book survey, held strong, unchanged and up 6.2% from the same week a year ago. And the next Richmond Fed factory survey moved up a bit, but is now showing an expansion, its most since October 2023. This was a better result than anticipated, and in complete contrast to yesterday's Texas survey. And the Dallas Fed's services survey eased back, but it's still expanding, although the trend has turned down mainly because of the outlook uncertainty is rising. But none of this data trumped the fast-rising doom mood in the US. The latest Conference Board survey of consumer sentiment was particularly negative. Its reading of consumer confidence registered its largest monthly decline since August 2021. Although other similar surveys like the PMIs and the University of Michigan one showed the same trend, this latest one was worse and just compounded the negative mood. Risk aversion sentiment is gripping financial markets today. Wall Street is lower, the US Treasury bond prices are surging and yields are falling. Yield inversions are returning, and the US dollar is rising in the normal reaction to a risk-off mood. Everyone from consumers to financial market professionals know the US is going the wrong way with its public policy. And we should probably note that the Tesla share price is down more than 8% so far today, down 14% in a week, down 20% since the start of the year. The move fast and break things strategy isn't proving to be a good business practice. There was another US Treasury 5-year auction today, and well supported, and delivering a yield of 4.07%, lower than the 4.29% at the equivalent event a month ago. Elsewhere, Taiwanese retail sales are on the rise, up 5.3% in January from a year ago in a strong showing, and much better than expected. Meanwhile, Taiwanese industrial production growth eased, but only back to levels expected. And South Korea's central bank cut its policy rate by 25 basis points to 2.75% yesterday. This was as expected too. It's their third cut since this rate peaked in January 2023 at 3.5%. Their cutting cycle started in October 2024. In China, exports through Hong Kong fell to a one-year low in January and a sharp retreat from December. This is their weakest growth in exports activity after sharp reversals for exports of electrical machinery and household appliances. In Australia, regulator ASIC is warning of risks of investing in private markets, a growing trend recently. The opacity of valuations, liquidity and governance has them worried. And as the Aussies get ready for a probable May election, it has been standard to expect the ruling Labour Party to lose, mainly because incumbents are losing everywhere. But a new poll suggests a change may in fact not happen there. No doubt they're encouraged by the German election, where essentially the centre held. The US Treasury 10-year yield is now at 4.31%, down 10 basis points from yesterday at this time. And the price of gold will start today at just under $2,894 an ounce, and down $48 from yesterday. And oil prices are down $2, at just under $69 a barrel in the US, while international Brent price is now just under $73 a barrel. And the Kiwi dollar is now at 57.2 US cents and down 20 basis points from yesterday. Against the Aussie, we're unchanged at 90.3 Australian cents. Against the euro, we're down 40 basis points at 54.4 euro cents. That all means our trade-weighted index starts today at just on 66.9 and down 30 basis points from yesterday. And the Bitcoin price starts today at $87,309, down a massive 7.7% from this time yesterday. Bitcoin has dropped about 20% since Trump's January inauguration, as initial optimism over his crypto-friendly stance fades. Bitcoin wasn't the only crypto to drop. Volatility over the past 24 hours has been very high, plus or minus 4.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.